Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, July 16th. We had a lot of green on the screen earlier today and was classic turnaround Tuesday type trade following yesterday's steep losses. Giving that up a little bit here as we get closer to the pause. Right now, corn is 1 to 3 better. Same with beans. We're mixed right now in the products. Bean oil is steady to a little higher, meal steady to a little bit lower. And mixed trade in the wheat as well. Pretty much steady in Chicago, down 2 to 3 in Kansas City, while up 1 to 2 in Minneapolis. Speculative traders just continue to pile on the short side of the market yesterday, selling another 15,000 contracts of corn, 11,000 contracts of soybeans. We've got money managers now sitting at record short positions in both at about 360,000 corn and 195,000 contracts in the beans. Crop ratings yesterday after the close showed conditions for both corn and beans held steady at 68%, good to excellent. We were expecting a little bit of improvement. However, they are both still the highest rated crops since 2020. In corn, only 4 states improved while 14 states declined, so I thought we might see a little bit more decline from that measure. Biggest improvements were in North Dakota and in Illinois. Biggest drops were in Texas and in Ohio. 41% of the corn crop is silking. That's above a year ago and the 5-year average, while 8% of the crop is in the dough stage. The window for U.S. weather wreaking havoc with this year's corn crop is quickly closing. In beans, ratings fell in 9 states, improved in 6 while holding steady in 3. 51% of the crop is blooming. That's in line with a year ago, however, above the 5-year average. 18% of the crop is setting pods. To me, current ratings suggest U.S. corn yield of roughly 183 to 184 bushels an acre versus USDA forecast of 181. Beans probably very near 53, above the USDA's 52 bushel per acre forecast. Still a fair amount of weather to go through yet here to realize this record bean yield. Winter wheat harvest did advance to 71%. That was slightly below expectations, however, well above the 53% pace from a year ago and the 5-year average of 62. Spring wheat conditions just keep getting better, up another 2% this past week to 77%, good to excellent, and the highest rated crop since 2019. Saw some pretty big thunderstorms roll through the Chicagoland area overnight, bringing high winds and several reports of tornadoes. These storms have diminished as they have moved off to the south and east. A more normal to slightly below normal temperature pattern is expected to develop over much of the nation's midsection now, really through about the end of July, so not really providing much fuel for the weather bulls. Hot, dry conditions do prevail still here across areas of Eastern Europe and stressing crops in Ukraine and Western Kazakhstan. NOPA crush yesterday came in at just below 176 million bushels. That was at the low end of expectations. As a result, however, bean oil stocks fell to 1.622 billion pounds. That also was at the low end of expectation. Corn demand right now is only so-so. I think it will have to prove itself over time. So far, December has been able to hold above the $4 level, a level that I think will be violated without signs of a more threatening late season weather problem to spook speculative trade out of their short positions. We did see some new lows overnight in Nove beans, but really didn't press the downside very far, setting up a little bit of a recovery here. Still searching for a level that stimulates better export demand. And wheat prices too here hovering near recent lows, just under the sheer weight of this year's U.S. soybean or U.S. winter wheat harvest. So steady a little higher right now, trying to get things to rebound a touch. We'll be watching for signs of improved export demand on this lower prices. So thank you for listening, everyone, and have a wonderful day.